Good morning, ladies and gentlemen. Well, today's not a pretty day. Looks like I'm getting divorced. Yep, you heard correctly here. You heard it first, Boiler Room Trading Connor. He's getting divorced. The old lady says she's got paper hands, and she just can't, she can't stick with AMC, and she can't stick with me anymore. She's become a softie. No, just kidding, folks, just kidding. Everybody stop freaking out. I'm not getting divorced over AMC. I don't even have a wife, so yeah, it's just a joke. But things aren't looking so pretty for the time being. So we're going to run through this, give you guys the most accurate representation of what AMC's probably can potentially do for the day, if AMC ever works. All right, there we go. So the first thing that we will do is we will look at AMC and we will touch back on the analysis from yesterday. So yesterday, it's kind of changed a little bit. Let me delete these drawings. But in simple terms, yesterday we had mentioned that you should probably see resistance on AMC around like 46.55's area. At the time pre-market, support was down around like 43.50. By the time market opened, support was at like 44.24. And as you can see, the market slowly got below 44.24, held resistance, faded down. So really the question would be, where is AMC going to bounce now? So we'll give you guys that price target here in just a second. Alrighty, so looking further into AMC, pretty much market's bearish. The way this is going to work, I mean, not necessarily, but ideally the regression trend down here of 37.67 is the target. It was the target when we were selling off here. It still is the target from the sell-off here. That's the 4-hour chart. The daily chart has a move down to there, so ideally, you don't actually have any support on the market that you should probably try to buy into until the market on AMC gets down to 37 to 36. So for now, we're probably going to stay bearish on AMC, looking for the markets to go down to 37.65 to 37. In the event that that analysis is wrong, which I don't think it is, but in the event that it is wrong, the only time you would be long bias is if the market comes back up and through the prices of, I believe this, let me just double check. Yeah, there. Okay. So a better way of putting it is like this. Rectangle, that guy, boom, boom, bam, perfect. CBW still kind of being shitty. All right. So, ladies and gentlemen, that red box is your resistance. The green box is your support. Off the green box is a reversal dip by long. And then through the red box would be resistance. So ideally, there's really two ways this market's probably going to work, and that would either be somehow magically it gets really bullish and runs all the way up to 44.62 to 46.34. The bulls on AMC will not take back control of the trending market until they get up and through the red box and stay above the red box. The bulls will most likely not try to do like a dip by reversal situation until the market gets into the green. So if in the event we don't go to the green, you're going to be following the intraday price action, whether a 5-minute chart, 1-minute chart, 20-minute chart, 30-minute chart. I don't really care. Whatever you like to use is fine, but whatever you use or helps you to determine price action and or trending move, if in the event it's not coming off a support, okay, then you can look for a move up to that price. Basically what I'm saying is just because it doesn't go down to here doesn't mean you can't see buying. That's the reversal support. You have no idea who's invested in the market, who's willing to buy at what prices, but if for whatever reason the market sustains here and starts to run to the red, you have to determine that for yourself because it won't be coming off support. It will be based off of intraday price action, consolidation, and the confusion between bulls and bears trying to decide which way it's going to go on the day. So ideally, you're going to have bulls and bears battling to start the day. Whomever wins the battle will kickstart the move either to the green or to the red. And then your lower risk entry points will be at the green or the red because that's resistance and that's support. Taking a trade in the middle of the red or the green is not trading off support or resistance. That's trading trend. You have to be able to determine which way the trend's going to go. Which box is it going to go to? Which tends to be a little harder than waiting for it to go to and then just taking a trade there. So remember that. Easier trades are always in the green and always in the red. Harder trades are taking a trade in between the green and the red, trying to determine which way the market or which color the market's going to trend to. And that's the way the market works every single day. You'll have a support and you'll have a resistance, and it's the hardest to determine which way the market will trend to. But once it gets to, it will normally stop and pull back, or once it gets to, it will stop and bounce. So a lot of times it's easier to take trades around resistance and supports as opposed to figuring out which way the trend's going to move. All right, that's AMC. Those are the price targets you want to follow for the day. All right, on to the next one, which is odd because no one has said anything in the chat this morning, which is just really weird. That usually doesn't happen, or it wasn't populating. There we go. That was really odd. This whole time I've been on, like, there was not one comment in the chat, but I was like, that's weird. Divorce clickbait? Of course it's clickbait. Jesus. Would you rather me say AMC is going to go to 100,000? That's more believable than me getting divorced even though I'm not married. Just kidding. What's the difference between your standard deviation lines and VWAP with standard deviation? To be honest, I don't know the actual fine print of what's different, but I believe the difference in standard deviation, I could be wrong about this, but it's somewhere along the lines of this. Standard deviation and Bollinger Bands are calculated slightly different. They're both based around standard deviation, but I believe Bollinger Bands calculate in volatility slightly different than that of standard deviation. So I believe it's the volatility aspect or the calculation that goes into the script or the study or the algorithm, if you may, in which makes sort of the bigger difference, if that makes sense. Yeah, so this might help explain it, right? Because also with Bollinger Bands, when the market, which also happens with standard deviation, so that's not entirely correct. Yeah, but you can see the Bollinger Band shrink right when we go through consolidation. You can see Bollinger Bands get tighter, which happens with standard deviation, just not as quickly would be a way of saying it. I can't really explain it too well, I guess, but it does have to do with volatility. Do you have any training on swing trading? Birds and beyond? No. Actually, it's something I was going to make a video on. I've been wanting to because I always get so many questions on that. But no videos on swing trading. But at the end of the day, swing trading is basically the same approach I use for day trading is really the same approach I use for swing trading. I know it sounds kind of crazy, but once you really start diving into everything and kind of getting down to the nitty gritty, you realize that, for example, let's say one second. So I'm going to use an example from really far back, like this, right? Let's say that dip buy. Now at the time levels were all different, blah, 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 blah. Or wait, no, not that. Oh, well, it really was 180 there. But anyways, back in the day before they went their split, I believe that was 180. I could be wrong, but let's say you wanted to buy that there, right? You're like, I want to swing trade this year. Swing trade that there. But also, let's say this. Take Connor A and Connor B. One of them's day trading, one of them's swing trading. The same things that Connor A, the one swing trading, would be looking for an entry on a swing trade would be the same thing that Connor B is doing, looking for a good entry on the day for a day trade. So literally the same levels. And the better way of putting that is if you could yourself, or let's just say there was a way to determine the best possible price to be buying a stock every single day and or the best possible price to be buying a stock for a swing trade, right? Those lowest possible prices, they're always going to be the same, right? If $180 is going to be the lowest point before the stock starts to go up, then no matter what, whether it's a 100-day time frame or an intraday time frame, if it's going to stop at 180, it's going to stop at 180, right? And if you were going to day trade Tesla on that day, and let's say it goes from 180 to 200, and you were going to swing trade that stock, regardless, the 180 is still the entry point for the swing trade and the day trade. You're just swing trading is just holding longer, going for longer price targets, which means you have to hold through, you know, some red days and some small green days. But the entry points and exit points for day trading and swing trading are generally the same. Which probably didn't help really answer your question. All I'm really trying to say is swing trading isn't all that different from day trading at the end of the day. It just has to do... the only thing that's really different is just the holding period. The entry and exit's all the same for day trading. Swing trading, day trading, entry, exit's the same. The termination of how long you hold is really the only difference. Whoo, she. Yeah, we'll take a look at the market. Would you touch on AMC? We already touched on AMC, but I'll just go back really quickly so you can see the two price levels. All right, this is going to take like 2 seconds, guys. So again, that's your support dip buy for the day down here at like 37.20s area, down in 37s. Your resistance on the day for AMC is going to be 44.54 to 46. The bulls don't take back control of the market till they're all the way over the red box, and the bears have control of the market for the time being. That's pretty much it. The next bigger breakdown spot in the market's going to be below 37. So you don't have to panic and you don't have to freak out about AMC dropping $20 a day, because it's not going to happen, okay? The market's just not really set up in a way for it to drop 20 points or 10 points, right? Really, the market's only set up for it to drop down from 41 to 37, so about a $5 drop, or a long play of 41 to 44. So it's really a long play of $5 to $6 and a short play of $5 to $6. All right, ITRM, Mr. Janesh Gan. Not even going to say your last name. Sorry, bud. But thank you. All right, so over to ITRM. This is a swing trading stock, not a day trading stock, given the movement of the stock. You're down at -1 deviation. Yeah, so you're more of a dip buy long sort of play right now, with the stop loss located below pretty much this previous low. Might as well. So $1.14 stop area, long bias entry right now. And the only reason I'm saying that is because we're at -1 deviation. So ideally, we've sold all the way back down to -1, which is the bounce area. You're right on trend. It does appear that the market already tried to bounce. You can see we came down to -1. We bounced 2 days in a row, had a red day, and the red day bottom is holding just over 121, which is a low of the -1 deviation, blah, 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 blah. Anyways, long bias more so than short bias. But you can see that the market's already tried to bounce it, had a red day. But like I said, I'm not really short bias that stock at that price. I'd be more long bias looking for a bounce reversal. And then your target on the way back up, well, for one would have been 144, which already hit, all the way up to 167. So your at most target on this bounce reversal is $1.67 for the time being. What do I think about other day traders, YouTubers? I really have zero opinions of other day traders or YouTubers. And really the reason is because I just don't care to comment on somebody else. Pretty much it. Yeah, I'm just kind of focused on myself. Doesn't really bother me. I mean, everybody has some good content here and there for sure. But it generally comes down to kind of finding the personality of anybody you're following that you like to stick with. All right. Baba. Yeah, we can talk about Baba. So the last time that we talked about Baba, we recommended it as a long trade. Which might have been like last week at some point. So last week we recommended Baba as a long trade. Our recommendation was when the stock was down here, we said your long move is going to be up to this trend line. You'll see that we got to the trend line. And at the time I told you that the only way the markets are gonna move like even higher is they have to break through that trend line. You'll see we got the breakthrough. We gapped up to the 9-day moving average. Really doesn't matter, but anyways, we dipped down. We recommended it as a long. Now I'm going to say that you're probably going to see, I don't know, actually, 1 second. Yeah, so for me on Baba, my at most long target is up to 216. So I'm not actually positive it's going to get there because it's kind of awkward. But yeah, you know, the Atmos, so if you bought this dip and you've been holding, I would not be trying to get anything higher than the price of 215.88. And if I was long from this bottom when we got the gap up today, I would already be selling shares. Alrighty, we can take a look at OSAT. So OSAT overbought, had a good move. This one's, I mean, it's like nothing bad about it, but you have definitely missed the long move. So with OSAT, you're really in a matter of are people willing to keep buying this at extremely high prices and trying to force it higher even though it's really overbought. So with everybody asking about OSAT right now, OSAT, right? It's you guys asking the question, right? Are you willing to continue buying OSAT at extremely high prices to keep forcing it higher is really the question. So it's really up to you and whomever else in the market if they're willing to take on extreme risk to keep forcing it higher. If you're not, then the stock should go down. So it's just a matter of how risky people are willing to be at this point with that stock, I would say. So when we go take a look at the 4-hour chart, you're going to see 3 deviations is right there. And we go look at this one, that's 4 deviations up there. We go to the daily chart here. We're going to mark this mark there. We're going to mark this mark there, and blah, 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 blah. Next thing you know, we're going to go to the 1-minute chart. And what are you going to come to find? This is the 3 deviation. That's 4. So, I mean, ideally, the best way to say this is the overbought price right here. Okay, we broke through it a bit, but again, this is overbought right now. That's your resistance. Okay, the current support on the market isn't till about right there, I believe. Bigger support, that is. Well, we have one here. See, like I said, there's a lot of things to look at in this one because it's blown up so much and the volatility is so high that you could hit a lot of different price levels. So it makes it slightly challenging to trade. But yeah, this is the long-term resistance here. You're not going to see any more breakout moves until you can actually get up and through 1135. Let me color code this really quickly because I'm forgetting what's what. See, I marked a level there and now it's not there. It's just, I don't know, something's being goofy on this right now. No, I changed that, you piece of shit. Thank you. Come again. And then see, that's blue, so this has to be blue. Blue, and that's a hat. See, why didn't you change the blue, you piece of shit? Thank you. See how long this can take when I'm trying to do things like extremely proper and make sure you guys understand every single level, right? You could go to some other channel and they'll just tell you supports here, but I mean, you have to really like dive in and take a look at all this to get a full understanding of the market. See, that's not even a green, that's a blue. See, like when I get done with all this, when I get done doing all this, you guys are gonna be like, holy shit, how do you even, what are you even looking at? How do you pay attention to all that? I mean, that's good enough for now. I mean, if we come all the way down, I mean, I'd be surprised. So anyways. So again, this is the resistance. We're breaking through half deviations. Our support bounce in this drop, I would say, has the best chance at this zone. So I'm just going to say right now, this is our support zone. And it's really not that hard, right? If you were to look left at the chart here on OSAT, you would say, oh, well, you know, all right, you'd be like, oh, well, the market dipped down to here and it bounced. So since people bought here, that's support. 100% correct. But the reason people bought this dip the first time, so when the market came up like this and then it pulled back, the reason people bought here was because this green and blue line were there, right? So market goes up, then it pulls back and bounces here, right? The reason it bounced was because of the green line and the blue line. So the market bounces. And if you don't run the same charting system, you're just going to think that support is down here in this green box because people had bought this dip prior, so that's support, which is correct. That is true thinking. But the reason the support is there is because the trend is there. So if you don't know how to spot the trend, then you'll never know exactly where support's really at, if that makes sense. So that would be where I'd recommend sort of a stronger dip buy is back in the support area for right now. Breakout is going to be up and through 1139. Okay, now we're going to take a quick peek at the NASDAQ and just a SPY really quickly so everyone's updated on the market. Looks like we went through a drop. Did the CPI numbers come out yet? I thought that was at 8:30 myself. So CPI month-over-month expecting 0.5, actuals 0.9. CPI core month-to-month expecting 0.4, actual 0.9. CPI year-over-year expecting 4.9. Actual is 5.4. CPI core year-over-year expecting 4. Actual is 4.5. So what does that all mean in a nutshell? That all means in a nutshell that we have inflation. Wow, who could have fucking guessed? No shit. Obviously, it's not Biden's fault. It's not Trump's fault. This is just the way the United States works. This is the way things happen. We print money, things go up. We naturally live in a world of inflation. So keep your politics out of it. Inflation does not happen because of one president. Mr. Biden is not the reason that gas is like $5 a gallon or $4 a gallon or $3 a gallon. He's not entirely the sole reason. Presidents are never the sole reason. Just remember that, okay? So we are seeing inflation. That's a big portion due to the amount of money printing we've been getting, due to the amount of handouts that people have gotten from COVID-19, unemployment. There's just a lot of money floating in the world that originally wasn't there to begin with over the last 2 years, okay? So when we look at the NASDAQ, so it looks like markets are just kind of going down because of the CPI numbers that come out, which really isn't surprising. Right now I have support on the NASDAQ down at, one second. I have support on the NASDAQ today down at 360.75, 360.75, yeah, so on. So yeah, for right now, I would be looking for a dip support buy on the NASDAQ here at 360.75. I would not anticipate of a bigger market sell-off unless the market's actually breaking 360.75. So the NASDAQ is very close to support, and it's very close to getting a bounce. Unless, of course, it breaks support, but it can't break support until we at least try to bounce it. So we're normally going to try to bounce 360.75. If the market breaks 360.75, that's where you're going to see more bearish pressure that's going to bring the market down. And if that happens, then I will give you the next price target, which would probably be, it's super far away, which won't happen. So I'm not even going to say it. If we break 360.75, like maybe it goes down to like the 9-day moving average. But my supports are so far away that if we were to actually go to our true trending support today, we would see 360 to 3. It would be a 10,000. It would be a 1,000-point day on the SPY. We'd have to drop 10 points on the NASDAQ or maybe the SPY before we'd actually reach support. So that's like, is that right? Yeah. Wait, is that right? Hold on. I keep screwing myself up. That's not there. See, that's not even. No, not even close. Yeah, so what I'm saying is like a super negative bearish day could go all the way down to 357.57, but in order to do so, you're going to have to break the half deviation price at 360.84. And then given the way the market's set up, you'd have to trend 300 points. Wait, is that right? That's 360. No, to 361. So you'd have to trade 400 points below 3 and 4 deviations, which would be really hard to do. So anyways, that's the whole analysis for the Qs. All right, over to the SPY. SPY bearish, SPY down to 434.95. I'm just guessing, I don't even know, but I'm assuming that's the right level. No, it's not. I'm sorry, that's inaccurate. That was a level from yesterday. Today, the market on the SPY is going to go down to the price of 435.40. All right, so market, I mean, we pretty much went there. You can see this red line is my support. We're on a double bottom. So again, same scenario with SPY as the NASDAQ. NASDAQ and SPY coming into support pretty quickly here. And the only way we see a more bearish day is if, you know, SPY and Qs break their current support, which is pretty much right now. All right. So first, what is Connor doing? Connor would be looking for a bounce off these levels. If the bounce fails, then you'd be looking to be bearish on them. Okay. How long? I have that's a question I have absolutely no idea. I have a better question. The NASDAQ about to break 15K. How long will it run until it reverses? So I guess a good way of putting this is something that I have no clue will happen, but I've been watching it for like the past 3 years, which would be the NASDAQ at 3 deviations. If we see the NASDAQ up to 474, that's where I anticipate the market's going to crash. Just based off of technicals, right? Like, even if there was like no catalyst in the market, like, oh, President Biden decides to nuke a country or whatever, something crazy, right? If none of that happens, then from purely technical reasons, I would expect that we'd see a very, very harsh sell-off in the market if the NASDAQ were to get up to I said 475 earlier, I think, 415. So again, if the market can get up to 415 on the Qs, you know, and maybe a better way of doing it would be looking at the actual futures here. So yeah, if market gets on the futures to say 17,000, then I would expect a extremely harsh sell-off from the market. Charting works great on Forex. It's the same thing. I don't look at Forex market, but actually, I don't ever like look at them. But like, what? Someone send me a Forex ticker. It was like JPY, but I don't know if they have the /. But someone send me a Forex currency to look at on this, a popular one, and then I'll take a look at it for you. But it should work the exact same. Actually, good fella, I have seen videos from the uneducated economist. He's always in his car, so I kind of like the dude. All right, so give me 1 second. I need to take a look at something else here, and we don't have a whole lot of time left on the stream, so I gotta run. There we are. Yeah, so someone mentioned something about BLIN. If you guys look, I'll really quickly go look at OSAT. Where is OSAT? Right back, and where is it stopping? Right, look at that. Where did this candle reverse back up to, and where is it stopping? To the penny. To the penny, 1137, the top of that red box. What I'm telling you is not a lie. It's not bullshit, okay? You can't make this shit up. All right, your breakout there on OSAT today is over 1138. Okay, you cannot maketh this shitteth uppeth. All right, now we'll go take it back. Look at BLIN. Oh, BLIN, that is awesome. Now that is fun. Oh, it might be fun. Never mind. This is not fun. BLIN is pretty lame now. So, how sad. Yeah, BLIN squeezed up. I mean, it's already pretty overbought. Ideally, we'd be looking more bearish at these prices, generally speaking. But since there's no shares ashore, we can't participate bearish on the market, which kind of sucks. So I'm just going to go with, you know, everything here. I'm going to try to do my analysis as quickly as possible on this. But yeah, kind of a bummer. Would definitely like to be able to at least have the option to bet bearish on this stock, but we don't. So lame, stupid, dumb. Yep. So the market on this is overbought, right? So this is an overbought market. We're over the blue line, so we're over 3 deviations, right? So I just mapped that level off. You can see we ran up, we pulled back right around the blue line, pushed up to the dotted line, pulled back to the blue line, and holding. So in the immediate, if the bulls are going to continue forcing this stock upwards, they cannot allow the market to come back down below the +3 deviation mark, which is $8.76. Once the market gets through 876, you're going to see a sell-off. So the best way I could explain this is in normal situations and typical market conditions, you have entered into the selling location of BLIN. The only way BLIN continues to break out is if it can get over the price of 1022. It is also very likely that you would see BLIN hold the blue line and then push all the way over 967 to tag the 1025 price and then come down. That is all based on you determining it. But right now, BLIN is into what we would determine as a selling location. And the reason why is when you look at the chart, you will realize that we are overbought. Anything over the blue is overbought. All right, we're over the blue. All right, so short sellers like myself, we love to sell stocks down when they get over 3 deviations. The only reason you guys see really big runs from stocks when they get to these prices is if you're strong enough to beat a short seller. So you remember how I was just like, oh, this is dumb, there's no shares of short? That's because I'd be looking to sell this stock short right now. So the only way these things move higher is if you can force someone like me out of their play. You've entered the selling location. Shorts are selling into you long bias traders. You only get another move up if you beat those short sellers. So for me, I can't be bullish at this price. It just doesn't, to me, like make a lot of sense. Can't really be bullish. Okay, so I'd be bearish, and I would be looking for a snap back below the blue line. All right, but also note that the risk, if you were short, your risk theoretically could be as high as 1023. I don't expect it's going to jump to 1023. But anyways, BLIN, if you're looking, I'm bearish. Once you get through this blue line, you better watch out because shit's going to hit the motherfucking fan. See, and the thing is you, not you, but you, if you haven't learned sort of the same approach, you would say, oh, we kind of bounced here and we squeezed up. So if we can hold this support, we're going to go higher, right? But you don't even know why the market dipped and held here, right? So the market's going up, then it pulls back and stops right here. The reason it's stopping is because the 3 deviation mark's there. So on the way down, the objective of the short sellers is to break 3 deviations. The objective of the bulls is to hold 3 deviations. So the bearish traders that are short right now are getting all the bullish traders to stop out. That candle is harsh because long bias traders are now stopping out of their long position. So the longs that are stopping out are what create the payday for the shorts. And when short sellers stop out, they create the payday for the bulls. And that's the way the market works. It's always a battle between bearish and bullish traders, and whomever wins the battle creates the payout for the opposing side or your enemy or your opposing team for that matter. So you will see, look at this candle. Where did this green candle go to? It squeezed right back to the blue line, slightly over, but the body candle is trying to stay below, right? So again, that's generally how this game works. All right, so that's BLIN, and it's to the point where I pretty much gotta go. So I apologize about that, but if you could do me a favor, hit the thumbs up button before you head out the door. I would appreciate that. Make sure you hit the subscribe button and the notification bell. And if you've already been subscribed to the channel, make sure you go back and double check that you're subscribed, because randomly people just don't get notifications and then look and find that they're somehow not subscribed to the channel anymore. So weird things happen like that. So double check that, and I'll see you guys all back tomorrow morning for another